All right, everyone. We are here today with Faizan Khan, founder of Visory Capital, advisor at Minds. Welcome, Faizan.
Thanks for having me, guys. Love the new show. Appreciate it.
Yeah. So just
Glad to have you.
for some context, Faizan is runs a big fund and is very knowledgeable about crypto markets, traditional markets. He also has helped a ton at Minds, historically worked with us, and is also an investor and just all around badass dude. So we're going to go through some of the crypto news, China, and yeah. So, when I first saw that Bankman was there's this New York Times Deal Book conference with like Zuckerberg, Zelensky, Netanyahu. Like the list of names is obscene, and he was on there. And so when the FTX news first came out, you figured, oh, okay, well that's definitely not going to happen. But it's crazy that that was going to happen. And then he comes out and says I'm still doing it, and Andrew Sorkin says, yeah, I'm gonna press him hard. So, curious, Faizan, what your feeling was on that.
Yeah, I think it's funny because everyone in crypto really wants justice to be served, and a lot of people outside are. I mean, there's like apologism going on because SBF obviously checks certain boxes off politically and made the right moves and donations, said the right things for enough time, and I don't know. I just feel like he's gonna. I feel like he's gonna walk. I mean, that's.
Unbelievable.
I just if it's something, it'll be light. It'll be lighter than crypto. People will have an outrage. And the thing is, it's funny because politicians are coming out. Like Elizabeth Warren came out today saying very negative things about the whole industry of crypto. But what happened with FTX was really just like a lending, banking, centralized failure. It had nothing to do with the technology. I mean, the decentralized finance stuff in crypto, the protocols still worked. They didn't, if anything, they did better with the lending. Things got returned to those protocols, not, so FTX did all these, backdoor deals. We don't know the details, to be frank, but
Mm-hmm.
there's no way it's clean. There's no way there isn't egregious stuff there. So
Right.
yeah, I think he's just bought out the right people. We'll see. I mean, we'll see what happens in this interview today, but it's just, I'm sure he'll have some defenses about, oh, crypto prices just went down. We got caught in that, and we made some mistakes, and I'm sorry. Basically, that's kind of what
Right.
it's
Yeah.
wild.
So, I mean, but compared to like Enron or Madoff, like, do you consider what happened with FTX to be a Ponzi?
It's not. So a lot of these things start off like they're not scams from the get go. Like they're not intentioned to be that. I think like when you have that much money in your bank account. So I think FTX just raised a massive amount of money. The exchange was a decent product. It was a good product, to be frank. It was good. Really, the problem was the hedge fund they were running on the side, taking customer funds, and they, when you have all that money in your bank account, it gets, you know, it makes people greedy basically, and it brings the worst out. Now he was a special level of that, though, sinister in my opinion, because of all the political stuff, and he was trying to get the target off his back and write regulation favoring FTX and all that stuff. But to answer your question, I mean, I don't think it was set out to be a Ponzi. I think that's an overused term, to be frank. I think it's pretty
Mm-hmm.
rare. Like he wasn't hiring ambassadors to shill FTT and to, it wasn't really like a pyramid scheme in that sense. It was really just a lending problem with these kind of backdoor lending deals that weren't vetted. That a lot of people were doing it in the space, right? A lot of people
So
were
the
doing
big
this.
question is
Um,
really going to be in terms of the legality of lending customer funds to Alameda, who
yeah,
was then doing risky stuff with it. You think like, so
yeah.
if he goes down, you think it'll be something with regards to that, or do you just don't see him going down?
I can't imagine it. If it's going down, it's going to be something light. Everyone will be shocked in the space. But I think he'll be able to put his hands up and just say, Luna blew up, for example, is another coin, another crazy. That was like more of a Ponzi,
And
if
nothing
anything.
happened to those guys.
Nothing. Yeah, I mean, in South Korea put out a warrant on them, but now they're one of the guys I think might still be in South Korea. I'm not sure. One of the co-founders, he might get in trouble actually, but the Do Kwon, the main guy's out. You know, he's missing or whatever. So yeah, I mean, I can't imagine him getting some staunch bad prison sentence or anything like that. It might be fines, it might be a light sentence, but I think he'll just be able to blame market conditions and put his hands up. And again, unless there's very blatant ties to Alameda doing like crazy lending with customer funds where that's very clear on the banking side. I just don't, it's so incurious. Everyone's so incurious about it on the political front. There's no Department of Justice hasn't put anything out to dig into this stuff. It's Maxine Waters who he's already buddy with. So it's like it's all the people he donated to rather politically are the ones running this thing. So that's another reason I just
did
can't
come out
imagine
yesterday and say that he lent or that he donated to some Republicans too.
Yeah,
did you hear that?
That was like dark. He said like it was dark because basically the media would get mad, which is kind of funny that that standard exists, by the way. So he made those donations in secret because there would be like, you know, New York Times would do a hit piece on him for being a Republican or whatever. He still was the biggest donor to Biden though, and I still think the types of Republicans he's donating to are the deeper establishment uniparty that is kind of going to be drawing the same conclusions regardless. So just because it's like, oh, he also donated to GOP, you need to look at who he donated to as well. And there's tons of Republicans who basically act as the same, you know, in the same party that'll go the same way on this. So yeah, it's a bipartisan mess really in a way, but yeah.
Yeah.
And the other thing that came on that interview he just did was the back door. He didn't program the back door.
He said I don't know how to code. He said so.
Right,
he has people who do though. Like it's yeah. I have to hear more about that.
Okay.
About the context of that. I'm sure. Hopefully that comes up. We'll see if Sorkin really sticks it to him. You know.
Yeah.
But again, I mean, he donated to this. What was that? It's a smaller outlet, kind of like an Axios. It's like starts with an S. It's like SF something.
Semaphore.
Yeah, Semaphore. Right. Like he donated to them, and they did a very soft piece saying, you know, this is not, you know, this could just be a bank run basically. Like customers lost faith and they pulled money out, and they just lost that money. It wasn't a scam. It wasn't an issue, right? But if you look at their balance sheet,
it's almost as if he and the media are trying to place more blame on crypto than him. And centralized exchanges like him that kind of have these shady practices. Like, do you think that, because even from the get-go, he seems so nonchalant, and like what that whole Twitter thing where he was just posting the letters one at a time of like what happened, like that's the weirdest thing I've ever seen.
Yeah.
Did you see that?
Yeah, and he said apparently there was a leaked Slack of he was saying, "Oh, I just need to break up the noise. There's so much mob mentality." So I did that weird thing to break the noise up. So there was like a leak Slack. If you follow Autism Capital, and I don't know, I feel like there's something going on. They know him or something. Maybe they were at his ex hedge fund because they just know way too much. They don't know who they are, but it's a great account to follow. They might be his previous fund he worked at was Jane Street. I just have a feeling they're like ex Jane Street guys who maybe don't like him or something. Like, anyways, that's a side conspiracy. But yeah, they're doing like the best journalism on this. Like, you're getting good information about deposits they've done, on-chain activity they've done, transfers, you know, leaked messages they're getting. It's completely incurious for media. That's why, like, that's for me, that's like the hierarchy speaking. When the media is incurious about something, nothing's going to happen politically. It's too tied. Like, I can't imagine at politicians going after this. There'd be a couple people maybe
happening,
like,
right?
There's a hearing, but I think it's just like a song and dance. Honestly, he'll be able to do his little mea culpa, and I can't imagine them, you know, hitting the hammer on that. Right?
Do you think he should
I'd
go
love
to jail?
be surprised if there's ties on the Alameda stuff. And by the way, it might not just be him. I think there's that guy Sam Trabacco or whatever. He's something going on there, man. He's shady. He was the co-CEO of Alameda. He left about a month before this whole fiasco, and he was the co-CEO with that lady. I can't remember her name. The woman that's working at Alameda. there's something going on with him. I mean, like, so yeah, there's a lot more behind the curtain here. I don't know what the sentence should be. I need to understand the data more. Like, I
Right.
don't want
Yeah, for
to
sure. Yeah,
strike the
we don't.
gavel and say you
We
should get
know
life.
very little.
Yeah, yeah. But even
Um,
just, and I've never used the exchange. I just never was a fan of all his just endless virtue signaling, and you could just tell. He even said like a lot of this is just virtue signaling to get the target off my back.
yeah, he said that in that
He
lead
said that
text.
in the DMs. It's kind of funny. That's like probably what a lot of CEOs like. He gave us like the psyche of a lot of CEOs
Right.
out there that are doing these things, song and dance, just to get the target off. Like he gave us that. If there's one value from this, it's that. Like we got a little internal psychology on this. But
So
anyways,
let's look at the Bitcoin chart, Sean. And so what around like in 16K range right now.
can you hit log?
17.
Can you hit the log button? Make it look a little prettier.
Sure.
It's up
There you
towards
go.
17 right now.
Yeah, a little pop
Explain
today.
log to people.
Looks prettier now.
It's logarithmic. It's just like on a different curve. It's like for things that grow exponentially, you kind of like stretch it out a little more, and it's just not as vertical of a chart. Better scaling.
But okay, I see. So it's spread out, so it seems less drastic. But
pretty much.
what's the benefit of looking at it like this? It just
Well, I mean, it was a big thing a few years ago. They said, oh, you always have to look in log. It's really just to visualize it better, because like when things grow so parabolically and exponentially, like crypto, and even like some stocks just are unbelievably vertical. It's just a better way to see the long-term trend. It's really just a visual thing. There's not much behind it.
Right, basically showing that we're not as low as you think. But this kind of
it's all
makes
kind
it
of relative. Yeah.
But this makes it seem like if the high was, near 70 and we're at 16K, this seems almost like wrong. You would think that
Yeah, it's also like CoinGecko is not the best chart in the world too, but it's fine. It's a
Okay.
good one for this. I mean, yeah.
All
Yeah.
right.
Charts are charts. It's just, yeah.
So, like what does this mean to you, and like what do you feel is gonna happen over the next few years?
Few years. Yeah. I mean, I'll start with near term stuff and then definitely look on further. Yeah, a lot of people were like calling the bottom around, that when it went under 20 and saying like, oh, it's going to be different this time. We're not, and typically when there's a bull market, Bitcoin corrects like 85%. It's just this weird invisible hand in markets. Like I'm very fascinated with like fractal markets and how human behavior kind of repeats and resets, and kind of manias happen and then depressions happen basically, or despair happens. So yeah, I always kind of figured that wasn't the bottom. 17, we needed something to happen. I definitely did not expect it would be FTX. Like, I don't think that caught everyone off guard. Like, no one got that one. Like, people thought maybe smaller exchanges would go under, or lending desks, or some smaller hedge funds or whatever, but not FTX, just because their appearance. They did a good job making themselves clean or whatever. But that's usually an indicator, by the way. So yeah, look, I think most of the selling is probably, and again, this is not financial advice, it's just my take on it. But yeah, most of the selling is probably, I think, done. Like most of the panic is probably done. If we do sell off more, it'll be kind of just a slow trickle, like low volume. Everyone's kind of fatigued. Like whenever you have these sharp sell-offs, usually there's kind of a sideways period. So yeah, I think regardless, like whether this is the bottom or not, and I'm fine with entertaining that this is the bottom. Like I think we still have a couple quarters, 6 to 9 months, that probably of like just sideways, boring, dull activity. But I think stocks will bottom in parallel, and then like risk will come back. Like risk will come back into the market at some point. Inflation has peaked. Rate hikes. I don't want to get super like technical on the economic stuff, but like, yeah, rate hikes will kind of peak as well and slow down. And so like when that happens, risk will come back slowly. But like anyone rushing into it thinking it's going to be like COVID, where there was a COVID crash and suddenly a V-shaped recovery back up, it's just not the same environment. This is a macro drawdown. It's going to take time. The psychology needs to reset. And just one more note on that too. Like my whole thesis on market cycles is like, if you just remember, and I'm sure a lot of your audience was in crypto or has it or had stocks or something, just try to remember like 2019 or 2018 through 2021, and just remember how like entitled we all were, checking our phones, refreshing our portfolios. It's at all-time highs. We're feeling great. Like just remember that, right? We kind of forget that how just arrogant we all were. Like, I'm a genius. I picked the right coins. I'm so good. I picked the right stocks. We all went through that, and then Hopefully we sold a bunch. Maybe we didn't. Maybe we're holding good stuff. It's fine. Regardless, I'm bullish long term. But you need to kind of take that emotion and juxtapose that, invert it in the other direction for perhaps a similar amount of time, for maybe a year or two. You need kind of this dull, and that's what we've had so far. This kind of this negative emotion, the kind of the inverse. And it's not going to be a quick thing. It's going to take time to kind of reset those emotions and psychology. And so I think we're kind of in the middle of that. We're not in the middle. We're towards the tail end of that, but we're still in the thick of it. Where like, there's going to be sideways activity for some time. So to answer your original question of years out, I'm still bullish until like, let's say 2024. I'm not trying to time it perfectly, but like I'm still bullish in the future that risk will come back. It's just the nature of markets. And I think that crypto will be the fastest horse again off of whatever lows occur. So I'm still placing bets. I've been a buyer at 17 and a little bit recently at 16. I've been a buyer, and then I have some spread down to like 11 and 12 just in case it gets there. So that's kind of how I'm looking at it. And Ethereum's another topic. We don't have to get into it, but it's actually held up very well as well. So I am looking at that as well. So that's kind of my long view.
The psychology is a really interesting thing, Faizan. So Steven, friend of the program, friend of mine's, Destiny, he had brought up an interesting point in a debate the other day. And when you're talking about crypto, he had mentioned, look, it was supposed to be a alternate currency. It was never supposed to be about getting rich. And he went on to kind of explain, like that the psychology of that, it's like some people think it's about getting rich. Like, so for me, like that was an interesting take, just because I do like, I'm completely outside of this conversation. I come in as a boomer in this, but it does seem to me like a lot of people are interested in making a lot of money in crypto. Like, when you talk about the psychology, does it make sense to look at it from that angle, or should we be looking at it as just like a alternate currency?
Yeah, that's a good question. Yeah, I think in all like big changes, at least on the tech side, ever since we've had markets, and this probably goes back even in like the early IBM days when there were mainframes. You've definitely had like stock market bubble. I mean, the stock market's relatively new in human history, but like it's a way to certainly gauge trends, and somehow sometimes rather those trends become manias. But it doesn't kind of take away from the underlying trend, right? I think it's still there. So like in that same with the .com era, you had a bunch of nonsense companies created, they blew up, but then like a lot of good companies came out of that. Now, I'm sure we can critique big tech for other reasons, but they're still we didn't know they were going to turn into that, I guess, back then in early days of .com. But like, they're good companies. And also beyond like the FANG stocks and Google, and there's some great other tech companies that aren't household names that are doing great things. They're building great software. So like a lot of good stuff came out of that. So crypto like has these wild manias, and I still think just the underlying trend, it doesn't take away from that. Like the speculative thing is a way to bring in adoption. It gets stupid like when celebrities are talking about it and stuff, and that's usually a sign for me to get out, to be frank. A lot of people say, oh look, celebs are getting into it, let's jump in. For me, that's a big contraindicator. That's when it turns into a mania. But yeah, I think the psychology, I agree. I'd love it if people just focused on the tech, but I think you need like a little bit of incentive these days, at least. I mean, at least for this technology, it's ultimately a financial technology, and it's on its own payment rails and systems. And so it's pretty unique also from like companies, right? There are kind of protocols that you can buy into. It's pretty unique. But I think having the price and having the speculation does have some value as well. Like I think you kind of need. I don't know. I don't see it working any other way, really. As long as there's a price tied to it, right? For stable coins where you can pay, it's tied to the U.S. dollar. Like that's fine. That's actually a great payment tool. You don't need to speculate on that. But these other things, they're kind of creating their own market, and they're competing in some way against other assets and the dollar and other currencies. So
I mean, compare it to stocks. People get involved with technology for the cause. Plenty of people do that, but in parallel, other people, or maybe some people, have overlapping goals where there's sort of like a philosophical goal and a financial goal at the same time. So like regardless of what asset you're talking about, I mean, you may love the idea of buying land and, doing a certain type of thing with land, and that you may have some preservation goal or whatnot, but like inextricably tied to real estate is value either way. So, and even like currencies that are just meant to be used, like there's so many different currencies, all with fluctuating value. So to Destiny's point, like I see what he's saying, and I completely agree, like that people should be more focused on the philosophical goal of crypto.
Yeah.
But you can't extract the value component. So it's not like to force a debate where he's trying to say, oh, it needs to be either or. Well, that's just not the nature of most assets.
Yeah.
So,
the other thing, even just on the crypto side, like a lot of them aren't trying to be currencies. Like a lot of them are more commodities, assets, or they have a value pegged to some kind of usage on the network. And it's not like it's directly trying to compete with currencies. It's powering this. Maybe it's fuel for the network in a sense, and there's demand for that fuel, and you buy that fuel. That's kind of Ethereum, right? Or other layer one tokens. So yeah, also for like Destiny's point, I think just that distinction between currency and asset and commodity, and kind of this, it's kind of a new thing in some ways, but I mean, even the previous CFTC, which is like a regulatory body like the SEC, they came out and said like Ethereum looks a lot more like a commodity. Now, I don't know about this SEC, what they're going to do. I think it's trading more like a commodity. I think it should be treated more like that. But yeah, it's not trying to like compete with the US dollar, right? So it's like not really a currency in the first place, but like Bitcoin did set out to do that, sure. And I think it can get there, or at least be a reserve currency or backup or something like that, or way to opt out
or
of
like a reserve
authoritarianism.
asset. But like, because the funny thing
reserve
is
asset,
that even, the original white paper, peer-to-peer electronic cash, but most of the hardcore Bitcoiners now, the sailors of the world, the all kind of the Bitcoin maximalists, like they're not necessarily set on the whole currency angle. I think people do want to see that use case, but they also see it as like this long-term store of value, like digital gold type thing. Just because, there are scalability concerns, and, it's not necessarily, I don't know. I think it can be dual purpose, but yeah, in terms of Destiny's take, it's like, oh, it was meant to be a currency, and then all these greedy people got involved. I think that is true, but it also sort of exposes a little bit of his not really understanding kind of the treatment of these assets regulatory wise. Like, because like, yeah, if you listen to CFTC, SEC, yeah, they're talking about Bitcoin they're not talking about it as a currency. They're talking about Bitcoin as a commodity. Yeah.
Yeah.
So
interesting. And just I guess before we get into the China, this is a good way to transition. So is it still illegal to mine in China? And like, like what has that done for crypto?
Yeah, it's funny. So I remember the China ban in I guess it was it's like all a blur now, 2019 or 2020, geez, because COVID was at that point too. I think it was 2019, right? Yeah, like the market crashed like 50% and then came back. But yeah, basically, I don't exactly know what's happening regionally there. I think there probably are, because China does have some unique like provinces that have a little bit more, not sovereignty yet, that's probably too strong, but there's like localities there that kind of can get away with stuff. So there's a chance some hash rate has turned on there a little bit, but it's last time I checked was a few months ago. It's like pretty much non-existent, the hash rate there. So the miners, I believe it's still being enforced, or at least people aren't risking to try. And one of the big arguments for anti-Bitcoin folks before that was like China owns Bitcoin, China runs the network, most of the hash is coming out of there, like therefore they can control it, they can fork it, which is just, by the way, misunderstands a lot of Bitcoin's, the protocol governance anyway. But like that was a big argument. Now that argument is gone. So like all those critics now have to realize like there's huge companies opening in, and I invest in one in Texas. Sorry, I invest in one in that mines based on Niagara Falls energy. It's pretty cool. There's like a lot of stranded cheap energy in the Niagara Falls, so they use that. It's clean energy. It's hydroelectric. But like there's companies like that opening in the US now that are trying now. US, if you look at all the pools, is the dominant hash rate in the world. So it's like it's a great thing for America. We are opening, a lot of them are public companies. A lot of them are going to struggle in the bear market, but then you have survivors who, the mining companies I'm talking about who come out on top. So it's been a good narrative. Like you have better ownership of the mining, but again, it's kind of like the miners aren't the whole network. There's other consensus that exists with developers and people who run the nodes of the software. So that was never a legitimate narrative, but it's definitely shut people up. Like China owns, it's just not the case anymore. Yeah, so I think it's a positive for sure. Yeah.
Cool. Well, let's quickly look at Faizan's piece at visory.io. And is there anything in this piece, what's next for crypto, that you want to talk about that we haven't touched on?
We covered quite a bit of it, just in terms of the, I guess, psychology of it all, which is what I've always obsessed with, and I think we're getting pretty close to like the peak or the opposite psychology on the other end, like we were talking about. I guess the overall trend, like I guess we talked about that I'm still bullish long term. I didn't really go into why, some areas perhaps. I mean,
do you not see like some cascading failures over outside of crypto, which could then kind of blow back to crypto further and just cause more blood all across markets?
Yeah, that's true. That's one thing we didn't mention, like the stock market being very correlated. Yeah, so that is one of the reasons that I think there's a decent chance we haven't bottomed. Like I think a lot of the blood has occurred, a lot of the pain has occurred in crypto, but like there still could be a correlation to negative stock outlook. And macro stuff that we don't realize, geopolitical stuff. Sure, I think a lot of that has probably passed though. But like, yeah, sure. If there's pain in the stock market, like crypto will probably reach its like 85%. So if you look at this kind of fractal market of like things kind of repeat themselves, 85% is kind of this uncanny number that is met in every bear market. It's something around there. It's kind of weird. Like human psychology just keeps going there. That's kind of the bottom limit we hit in bearishness. Then that'll be around like 11,500, 12,000 kind of range.
Mm-hmm.
So there's like a little leg down there. And I think that if that happens, that would probably be caused by turmoil. China also, if you have a bigger, which is a good transition to the next thing, if you have a bigger, turmoil there, you might have, chip markets or semiconductors get hit, or supply chains or stuff like that could be affected. And obviously that impacts the US. So there's definitely a tie there. But I just think I'm betting on it not being different in the sense that it's not going to go much below it ever has. I still think it holds up, even if stocks have another leg down. I think Bitcoin kind of and Ethereum and everything kind of finds its bottom in a similar fashion. Yeah. So
yeah, it's pretty crazy. I mean, I think that, things are holding up in, relatively speaking, insanely well.
Yeah, I mean, I think it's going to surprise people, like a lot of naysayers, when it does bounce also off of like other market lows, whether this is it or not. I personally don't think this is it, even though it's nicely up today. I think it's kind of an interim thing, but yeah, I think it's going to surprise a lot of people that like this psychology thing is not going to go away. Like, yeah, no, go for it.
Yeah, it's just crazy, particularly in crypto, because the markets never sleep. Things move so fast, and like once things start, steaming, everybody, like people's brains can switch quick from being in this sort of despair mode to being in, much more of an excited mode. And, but that can be a false sense of hope as well. But
there's a lot of that, especially reading social, like my whole thing. And I learned this the hard way when I started, I taught myself to trade stocks like 10 plus years ago. And, I had horror stories there where I would listen to chats or message board. Back then, it wasn't so much Twitter. Actually, it was like stocktwits.com. This was like 8 years ago. And, I would listen to the group think there. Everyone was blended. Kind of like you need to kind of move away from the herd in a lot of ways and kind of think on your own. Like that's how you get caught either, holding on to everything and not selling anything because you think it's different this time. It's going to keep. And I wrote another piece called "It's Not Different This Time" back in May, before a lot of the contagion hit, and I just said, I don't care that celebrities got involved. I don't care that some institutions are getting involved. It's all relative. Like, all this is relative. Like, those institutions, if they have some, they'll just sell bigger amounts. Like, it's all, everything balances itself out. The celebs are going to go away. In fact, like, there's lawsuits now against Brady and these guys. So it's like, it all comes full circle. So that's my whole thing, is just moving away from the herd if you can, and kind of thinking for yourself. And what I was saying is, like, if you're caught on Twitter seeing these daily fluctuations in sentiment, like today everyone's saying, oh, the bottom's in, we're good. If you see a bunch of big crypto Twitter accounts, you just get caught in this weird funk. You need to step back from that. It's okay to, read social and get those data points, but you need to have your own perspective, like like 3 to 6, 9 month thing. And I'll plug this book. I keep this on my desk. It's Extraordinarily Popular Delusions and the Madness of the Crowds by Charles Mackay. It's basically like all these historical, what groupthink basically does. And it's like stock market bubbles, financial scams, like people searching for lost relics and they think the treasure's there. So like, it just goes back in history. I absolutely love that book. Just as a reminder, like, when consensus is a certain way, just try to, and this is true for everything, really. Just try to like go somewhere else and get in a different space. It's so true for so much stuff, We could talk about 20 political things where that's true. And like, it's this noisy consensus, and it turns into ideology in one place. And I'm just very fascinated by this. But then the truth is somewhere over here, very quietly, it's not popular. It's a lot of time it's unpopular. And you just have to try to go against
Didn't Douglas Murray have a book called The Madness of Crowds too?
Yeah.
Have you read his version of it?
I haven't. I guess it's an ode to it. Maybe. I don't know. I don't know much about it.
Yeah, I think it might be. So, all right, cool. Well, I guess the last thing I would say before we talk about China a little bit is it seems shocking to me that there haven't been any traditional market implosions. Like, I just don't understand. That seems so.
Like banks,
why?
Like institutions?
Like a major institution, or like at least one. I find it odd, and I just don't trust.
Well, I mean, it's fine. It's funny you say that, because when like the current phase we are in the market, where like inflation is peaking, or kind of like things kind of smell like recession might be coming, or like growth slowing, is actually traditionally when things go under. It's not during what just happened. So like what you just said, if you're right with that inkling or question, which I've also thought the same, like it would happen, and like from now on, it would happen maybe next year, or there's a delayed onset to that stuff, because as we speak, like a lot of the damage has been done, and people are in repair mode as we speak. They're firing people, they're doing layoffs. That's their way of hedging for a bear market or recession. It doesn't mean prices always follow that. I'm open to the idea of a softer landing here. I'm betting against that a little bit more, to be frank. I do think there's going to be more of a recession. That's pretty clear. I'm not saying some great depression thing. I'm not a doomsday person, but I just think there's delayed indicators that still need to hit into maybe next year. That is, maybe someone does go under. Maybe you're right. Maybe that's the next thing. Credit Suisse has issues. They've had issues for a while. But it also could just be that central banks are just stronger than ever, and they can prop these guys up. That could be the difference. They were never this strong in previous cycles. They never had this much influence over business. They never had this much influence over financial markets and regulation. So that could be the differing thing. Maybe this is a cycle without a blow up because of that. But then there's all sorts of other issues that come with that down the line,
Right. And like after the great financial meltdown in 2008, like a lot of regulation did come in, right?
Regulation came in, but they were still repeating the same. They kind of started doing the same game, essentially, though. I mean,
well, and also like the regulation is kind of written by some of the players that survived. It's written by the winners. So like Bear Stearns and Lehman went under, but like the remaining banks kind of helped write that regulation. So, regulatory capture, which is what, to draw back to FTX, that's what he was trying to do. He was trying to capture the regulators to write rules that would favor his situation. So I'm not saying all the regulation post 2008 was bad, but there was definitely a lot of favoritism there. It's also harder than ever to open up a new bank because they've boxed competitors out. So you have all sorts of weird centralization that occurs there. Like, JP Morgan, these guys are happier than ever because it's really hard to open like a consumer bank. Like the last administration under Trump, they actually tried to make it easier, but it's an uphill battle. So yeah, like all this is driving towards more centralization. So, it can prop things up, but there's a time limit to it. But anyway, centralization is probably a good transition to China because they're the king of that. So.
All right, well, let's take a look, Sean. So what's going on here?
So the White House is treading carefully on the COVID-0 lockdowns and protests in China. So you kind of saw this on Twitter for the last couple of days. People like Jack Posobiec have been getting videos out there of these protests that, the media, the mainstream media had been kind of not covering. They are starting to cover it now. But yeah, the Biden administration has been very, tight-lipped on this, essentially saying, look, our regulations are fine, instead of talking about, what's going on in China. It's kind of like when the Uyghur Muslim that topic came up, the forced slave labor, and Biden said, oh, just cultural differences, so it's kind of what we're seeing play out now. But it's interesting, this is a really big problem for China. So, wondering what your guys' take on this was, and if you'd seen any of the coverage.
How big are the numbers? I saw Posobiec was saying that this is the biggest since Tiananmen Square, but I've
heard that in a couple of places,
but it's not as big.
I'm not sure. Again, it's tough getting any real information out of China because they don't share anything. I actually went on Douyin, the Chinese TikTok platform, didn't find anything on there about it. Completely.
Well, yeah. I mean, what Apple did with the AirDrop stuff is just disgusting.
Yeah, I forgot about that.
What did they do with the AirDrop stuff, Bill?
They basically did a sneaky update to the app over there that limits AirDrop functionality because that's how people were sharing information over there. Yeah.
I didn't know that.
Yeah, it's really bad. I mean,
wow.
It's shameful. So, and it's just great to see. It's not great to see, but it's, meanwhile, Elon is kind of going on the offensive against them for a lot of their monopolistic app store practices and censorship. And, Apple also just basically dropped all of their advertising on Twitter amid all of this. So it's just wow. I mean, this company has lost their soul.
Yeah, well, and people were sounding the alarm bells years ago, and they had to install suicide nets in the Foxconn plants that create the iPhones, and if that doesn't tell you, because they were using Uyghurs slave labor at Foxconn in the plants, they're killing themselves, so they had to put these nets up to prevent the employees from killing themselves by jumping out of the building. I mean, just at that point, how do you not see Apple has no soul? So it's interesting seeing them kind of make the news again now.
They really never have. They've had an artistic inspiration within the company. Obviously, Eben Moglen has a really great quote about Steve Jobs. Eben Moglen's a Columbia professor. He's a founder of the Software Freedom Law Center, and he was one of the co-authors of the GPL license. And he's one of the most epic free software pioneers in the world. And his quote about Steve Jobs is, he's a brilliant artist and a moral monster. And it's just that is Apple. They, it's beautiful. It's like this beautiful monster. And everybody loves it because it's so clean. It works, but underneath it's just this exploitation machine. And people just and there's no, if anything, they're going deeper down the authoritarian path. Tim Cook is very tight with the whole ADL crew. He's given really creepy speeches about their stance on that. It's pretty obvious that after Elon met with the ADL and those other groups and then stopped playing ball, the ADL just probably went to Apple and said, you guys can't, you got to hit them where it hurts.
Yeah. Well, it's just, like the whole thing with Apple pulling their advertising for Twitter, that's fine. They can do that. I mean, whatever. Yeah, but you're absolutely right. I mean, they have their own issues like within the company that just get swept under the rug. I mean, there's so many problems with that company. It's actually funny. So I'm in Milwaukee. We have a Foxconn building that they built over here. And actually Trump, it's literally, I'm looking right at it. It's across the street from me. This was like, Trump was actually gloating about this because he got this deal done to bring this plant to Milwaukee. And yeah, it's interesting. There's been many articles written about it, but seriously, the people that they quote unquote hired, they didn't have a job. They weren't given like tools. They weren't given computers. They literally sat in a room every single day watching YouTube videos. Like they really were never, it was just a front. It's all a front. And, people have been talking about this is how China gets in. They create these front companies that integrate into the local government, which they tried doing. They tried getting these massive tax relief, this tax funds, which Milwaukee actually shut down, which was great. But it's just it's so fake. Like it's it's just crazy.
Yeah. I mean, we rolled the carpet out for China, like the West, like decades ago, and thinking that they'd become more like the West, and it's actually the opposite. We're becoming more like China in some ways, right? Yeah. So it's kind of the opposite, at least parts of the country, the corporate side, and in some areas, right? A question of, I mean, do you guys actually think, because I've seen headlines around how this could be the beginning of the end for Xi. It doesn't feel big enough for me. It doesn't feel like anything's material is going to happen here. I'd love to be wrong. Like I'd love to be proven wrong. But it just feels like a shot in the dark. The COVID restrictions will be lifted and they'll just go back to their merry ways. It needs to be bigger. It's a great message. Don't get me wrong, with the papers and everything. It's a great start. But what do you guys think?
It's just so odd to me that
big enough, or
they
I don't think so either. I'm in the same boat as you. It's just too strong of a regime.
Yeah.
For these,
you need something more global to happen. Yeah. Unfortunately, but I don't know what that looks like. But what were you saying, Bill?
Just that the fact that they started constructing these huge camps so recently.
Oh, I didn't. What's that for?
That? They just started constructing these new COVID camps. At least.
Oh, okay. The COVID. Yeah.
I mean.
Yeah.
Why are they so obsessed with COVID?
I know. So there's a couple takes on this. So it's interesting to answer your question, Faizan. I think this is very powerful because if you look at 2020, when COVID first came out and we established it came from China, like that was a big black eye to Xi, right? And the CCP, they obviously become the world's factory. Now they've done this thing. So their whole goal with this whole thing has been like, how do we make China look like the best country that's handled this? I mean, even if you look like when we were talking about the reporting with COVID, you would always see China was at the bottom. It was always like the US has the most cases and England and and China was
flat for so long.
Yeah, they were flat, like zero. It was just like completely unbelievable. But what was interesting is the people didn't revolt in 2020 and they didn't revolt in 2021. They didn't revolt when it was at its worst. And I think we may have found the breaking point for them. And I think that's what's interesting about this. It's, you can only tell people that they can't leave their house or they're not going to get paid for their labor for so long before they start to break. And I think for me, like, that's why I think this is so powerful, because you didn't see these protests in 2020 when there should have been. You didn't see it in 2021 when there should have been. But Xi's COVID zero, that's what they call it, COVID zero focus is just, it's going to crush these people. So Yeah, I do see it as like a really positive sign. But you know, as far as the world, like we've been turning a blind eye to the slave labor. I mean, everyone talks about the US and how we had slavery, centuries ago, whatever. Like like they actually have slave labor today, and they're utilizing it in every facet of their civilization. And it's really, and the world just turns a blind eye because we get cheap products. So I think what has to happen is people have to start voting with their wallet, like, and start finding things, alternatives to things that aren't built in China until, I mean, personally, that's the only thing that the basic, that I think the world can do. But as far as the people there, like it's sad, like they didn't ask to be in this position. And yeah, it's just not good.
Yeah, it's just crazy to think like how a revolution actually would unfold or could unfold. Like,
Yeah, I don't know
There's
how.
so many people. They have so many people.
they do, and that actually you would think would be in their favor.
Yeah.
Well, they're very, very scared of their government for good reasons.
Yeah. So, is this the dam finally starting to break? I don't know, but we didn't see it for the last couple of years, so it's really interesting.
Yeah, I hope so. I guess I just wouldn't be that surprised if it kind of got suddenly left headlines, and maybe that's just the incurious media not covering. Maybe there is stuff going on there, but I just wouldn't be surprised. I'd love to be wrong. Like I think it's a good sign though, because that is a big deal. Like standing up in that country, that's actual. Like the protests we have here are like joke, like hierarchy of needs. We're way up here. I don't even want to say what we protest here. It's ridiculous stuff, but you know what I'm talking about. And there is like you actually, it's pretty very, very, very gutsy to do it there. So it is a good sign, but it's hard, man.
I think the biggest thing for them, I think, over the years since G's been in power, the economy has gotten better, and really, really poor people have really moved up in the economic class, like to the middle class, and they actually have money. And I think what you're seeing here, it's these protests are, I'm seeing a lot of them are breaking out because they're not getting paid. So, I think that's kind of the secret. Like as long as the economy is doing well and jobs are there and all this stuff is doing well, like the people will put up with crazy stuff. But once you start losing that, I think that's when you lose the people.
Right. Yeah, hierarchy of needs. They say 48 hours civilization will, can turn on its head, and everyone's a savage without food, So
exactly.
Yeah.
All right, cool. Well, anything else you guys want to touch on?
No.
I have one question for you, Faizan. So it's really fantastic discussion. Now, again, I'm coming from the boomer stance on this, and I think I asked this the last time we were talking about crypto.
Yeah.
But so I understand why FTX did it with the celebrities. I understand why you bring Tom Brady on and Larry David, because you want to appeal to the masses, and I think crypto, it's one of those things where there's just a lot of people my age and older that are scared of it because they don't understand it. Are there any steps or is there any advice that you can give to people that are just kind of getting their feet wet and like as far as like, starting to buy crypto or get involved in crypto or whatever? Like what are some good steps for like newbies that really don't understand this and are interested?
Yeah, it's a good question. I think a lot of people just dive into whatever the celeb said, for example, or whatever, referral based stuff. I think the best place to start is to learn about Bitcoin, no matter what. Like you have to start there. A lot of newcomers this cycle jumped into NFTs right away, and there's just horror stories around that. Obviously, I mean, we didn't even cover that side, and I'm still bullish on NFTs long term. By the way, I think they're going to unlock a lot of other value, like identity and credentials and art and better art stuff, like better use cases for creators, I should say, and even insurance could be NFTs. But anyways, I digress there. But like for Bitcoin, like just learn those ideals first, learn how mining works, learn why, learn some cypherpunk side. You don't have to be a cypherpunk, but at least learn why as a response to where things are headed. It was created. A lot of young folks that I talk to, they jump right into these other chains and tokens, and they jump into, Shark Coin or whatever, and they jump in or whatever, right? And they don't think twice. So I think just like, so there's one, I don't know if it's still up, you probably know this one, Bill, lop.net/Bitcoin is
Oh
like,
yeah,
I think
Jameson.
so lopp.net/Bitcoin. And it's this guy, Jameson Lopp, he's a Bitcoiner, but he put together resources, really nice list of resources to get started, and then start there and then move into Ethereum, start learning about smart contracts. And I don't really have specific resources around that. There's a ton out there. It's hard to start somewhere. But yeah, just start in those steps. Don't go to the digital avatar squiggles lines worth $100,000 or CryptoPunks. Just don't go there. Take a while to do that. Don't, just because someone told you to buy a coin, don't do that. Start with the basics and build it, and even just build up your portfolio with those foundations. Don't start buying other small coins. Build foundational positions in Bitcoin, Ethereum. And again, not financial advice. I'm just saying this is what a lot of people do. Makes sense for a lot of people, and then kind of go from there. And I think that, yeah, I mean, it's an ongoing quest to learn, because the reason crypto is interesting is because it's a mixture of economics, game theory, philosophy, politics, computer science. Yeah, right. Art. I mean, yeah, and what value means. It's like a fundamental questions we never really ask. So try to kind of start in, these fundamentals, right?
Yeah, that's great advice.
And
even
then
like
like buying it, just be careful. I mean, it's all the usual stuff. Don't put in too much, then you can lose, right? Stuff like that. Just start, and also do some transactions. Hold stuff on a wallet. Get what it feels like to own your assets on a hardware wallet, and just understanding what that means versus what exists now. You have it
That's
custodied
the
somewhere
main
where
thing. I think for people looking at FTX, these collapses, Celsius, customer funds going bye-bye, it's a huge learning curve to understand like how blockchains actually work, consensus mechanisms, cryptography, public keys, private keys. But the main thing, and I've seen this meme going around, and it's very helpful, I think, is that when you go to like Coinbase, which is, Coinbase is probably like the best place to get crypto that is like generally trusted and regulated, public company in the US. But treat exchanges like bathrooms. Go in, take a crap, and get out. And that is what people have not been doing. They've been basically going into Coinbase or FTX, for example, buying a bunch of Bitcoin and then just leaving it there and not taking control of their own keys and their own crypto, which is the whole point of crypto. The whole point of getting a hardware wallet like a Ledger, or I don't know, is there another hardware wallet that you recommend?
I mean, just Trezor, Ledger. I actually invest in I'll shill foundationdevices.com. They're the best they're Bitcoin only. So they're the best. I mean, they're amazing UX and everything. But yeah, basically Trezor or Ledger for the average user.
Yeah. So you buy one of those with, they're like $50, $100, and you can then send your tokens from the exchange to the address on your hardware wallet. And then you just, go bury it in the, basement, or I don't know, put it in your basement. Like,
start there. Like
that's the main thing, because when you understand keys and custody of keys, that's the primary learning curve you have to understand. In crypto, everyone has a key pair. You have a public key, which is where people send you crypto, and then you have your private key, which is what enables you to access that crypto. And so, and when you buy a hardware wallet or a software wallet, like if you download an app like Trust Wallet or something, you get this key pair, and then you just got to back up your key. You lose your key, you lose your crypto. But the beauty of it is that you're becoming your own bank. And that is what is not possible in traditional markets. So, unless you're, holding your cash or gold at your house, which I guess is, but even then they're inflating away the value of it. So it's maybe not so much with gold, but yeah. So I think the bathroom analogy is the main thing for me. And then, like Faizan was saying, just learn, before you get in, don't get into things that you don't understand. And the two main assets that are like generally trusted because they've been audited and looked at by like some of the smartest people in the world are Bitcoin and Ethereum. So yeah. I don't know if there's anything else you want to add to that, Faizan.
Yeah, that's good, man. Yeah, and I think from there it also builds conviction on the technology if you use it a little bit, and in that sense, it builds your understanding of it, so you'll be more comfortable holding it. And on drawdowns, you'll say, you know what, I'm putting this away for the long run. And look, there's going to be a percentage of stuff you might want to use on the smaller coins, and it's more of a gamble or more of a bet or whatever. That's fine, but just sizing is the hardest part of investing. Like, how much do I put in what thing? So, I mean, just one other point on that, like, let's say you have 30K, a lot of people will do 30 $1,000 bets. And it's not going to go anywhere. Like, you could have one great performer, but you're going to have terrible performers. This is more just general investing, high level advice, but like, especially for young people, you don't want to spread too thin. You want to have a little bit more concentration in things you understand. It builds conviction. You have to understand it more because you're putting more money. So instead, maybe you put 6,000 in 5 positions. That's your 30K little investment portfolio you have. So only 5 investments, 6,000 each. They mean more to you, and you've done your research on them, right? So that's just a high level thing. But yeah, crypto is risky. I mean, I think it's a risk asset. It's not a hedge against inflation in a sense. Maybe on the long-term horizon it is, and the near-term horizon it's not. So you need to think big. You need to stretch out your time preference, as they say. It's a libertarian. Mises talked about time preference a lot. You have to have low time preference, where you want delayed gratification. That's actually a sign of intelligence and other things, right? You want to have, that's investing 101 is delayed gratification. It's never as clean as it seems. Like I've had, like the winners I've had, I don't sell the top. I sell somewhere in the middle of the top area, and then it goes up after I sell it, and I'm pulling my hair out. But you still made some capital on that. So like you have to take your wins when you can, right? Pull some money out here and there. If you're up, 800%, pull some money out so you stay sane. But yeah, it's just have a low time preference. That's the one thing with crypto you need to have. And don't think in the herd. Definitely, have your own thesis, have your own ideas, as much as you can.
You don't think it could also go the other way, though? It's like, yes, have a low time preference, but depending on how much you care, you may want to just have like a multi-decade time preference. Like,
yeah, I think you can stow away. Yeah, so like the thing you mentioned, like put it on the hardware wallet. That should be your multi-decade time preference. You don't even really think about it much. But yeah, I'm talking about, I guess that's your low time preference position, and then your the higher time preference position would be your, if you are interested in an NFT. I'm not saying don't get, if you're younger, especially, like, go check it out, but just don't. People went too far with it. Like, people just put all their net worth into these things. This is like obvious advice to anyone hearing it, but in the moment, you need to realize that felt and sounded good to a lot of people to do that in the moment, because everyone's doing it, and people were talking about their gains and all that stuff. So just referral based investing is really dangerous. Like hearing someone on social media did something, because you don't know what their goals are, you don't know what they hold. Everyone's goals are different. Make your own goals based on your net worth, based on your income, all that stuff, right? I mean, again, this is getting into more like high level investing stuff, but it really holds true for crypto as well. So
yeah, for me as well, like I like to vote with my money. I know that, and I don't.
DAO.
Yeah, I just don't think about. I've never like gotten in. Some people may do this, and they want to just play the stock market, and they'll throw it into like an S&P 500 index fund and just like let it be, and they don't really care like where their money's going. They just want to make money, and I think that I'm not judging against that type of a strategy. It's not something that particularly appeals to me, which is why I love Bitcoin and Ethereum, is because it sort of has, potential trajectory like the S&P, or even more so, but it's like a values-based investment, and like more, it's just related to where I want to see the world go. So It is just as much like, for instance, Faizan, I remember Assange DAO came out, and I threw I threw a lot into it. And basically, for anyone who doesn't know, this was this DAO that Julian Assange used to raise money for his legal fund. And he ended up raising like $40 million through this. And people got NFTs, or they got tokens to, and basically got to kind of
that represented an NFT apparently.
That represented an NFT.
Yeah. Yeah.
But, you know, of all of the, you know, losses that I took in this crash, you know, admittedly, the thing about that one, even though it hurt because obviously, you know, the token tanked and whatnot, but it felt good to me because I know that Assange, you know, sold all that ether, and they, you know, they sold it all, and, you know, he got $40 million to get out of, to try to, you know, deal with his legal situation.
Yeah.
So, you know, I'm not going to say how much, but like I put in like a ton of money that went to him. And so like, even it's not just like some random nonsense token that does nothing. Like it actually went somewhere that I feel good about. It's actually one of it. Yeah. Philosophically, it's one of my, you know, biggest wins of the whole craze, even though I you know, lost everything on it, but it was, so it ended up being a donation, which is a cool thing.
Yeah, I put some money into Assange as well, and
I took a loss on it too.
It's incredible how much constitutional DAO. I still have a bunch.
Yeah, that was crazy. Yeah, that was the best one. That was like the best DAO. Anyways, well, this could be a whole different topic on this.
It's still held up better than anything else.
Yeah,
it's held up pretty well, really, considering all the other crashes. It's held up.
Well, yeah, for anyone who doesn't know about that one, this is when, you know, basically there was a crowdfund, crypto crowdfund to buy a copy of the Constitution, and it raised like $40 million or something. And they actually lost the bid because Ken Griffin, the you know, big evil Citadel guy, you know, went and outbid it. And then, you know, but it's still just like this incredible story in the crypto world. They made huge headlines, and so now there's all of these like very organic grassroots DAOs forming with the people token around it, and, you know, the founders like burn the keys, and so it's like very decentralized, and it's just it's a cool little story. But cool. Well, this has been great. Let's do it again. Thanks for coming on, man.
Yeah, guys, I'd love to do another market chat or anything. Had a blast. And yeah, you guys are doing this daily. Hats off to you. You know, in this world with everything going on, you guys are capturing a good daily signal and daily feed of information. It's not easy. So props to you guys on that.
It's just, it's just getting it in the schedule and just doing it. It's like we're having these conversations anyway. So
yeah, I know you're saying that. Yeah, we're talking about this anyway. Let's record it. That's good.
Yeah, rock on, man. All right, everyone, check out Faizan on Minds. You find him at minds.com/Faizan or visory.io. Cheers. Bye.
Cheers.